All right, welcome back to video 3 in our small business valuation series. And in this video, we're going to be learning about what the heck is a multiple. 2 times, 5 times, 10 times. What's your business going to sell for? Who's to know? In the earlier video, we used 2.5 as our multiple, but why the heck did we do that? And is that the number we should be using for your company? We're going to find out by the end of this video. You're going to know your exact multiple that you should be using and why you're using that multiple. All right, let's drop into it. I'm Scott Duke. This is the Happy Dealmaker channel. If you're a small business entrepreneur that's looking to add value to your company and prepare it for sale, welcome home. This is your community. Like, subscribe. We release a video like this every single week that's going to get you to your goals faster. Okay, so let's pick up where we left off. We are video 3 in our small business valuation series, and we are talking about multiples. And where it fits into the equation is seller's discretionary earnings, which we went over in video 1 and video 2, times your multiple is going to give you the value of your company. And it all ties in with risk and return. We're trying to determine the risk of your business, which is the multiple, and the return that a buyer is going to get from your business, that is the SDE. Using those two pieces of data, we're going to know what the value is. In today's video, we're going to be covering 4 things. Multiple versus ROI, so this elusive return on investment, hurdle rate, cap rate, multiple, where does it all fit in? How is it different? Is it the same? We're going to be covering that so you'll leave with a good understanding. Then we're going to talk about multiples for small business versus other asset classes investors can put money into or other sectors they can put money, and kind of understand where we fit in the landscape with a small business when we take it to market. Then we're going to talk about determining your multiple, right? Which is kind of why you're here now listening to this video, and it's the most important part of this video, is what's the multiple that your business is going to sell for. We're going to dive right into that and show you the exact places that you can get that data. Then we're going to finish off our furniture store calculations so that we have a better idea of what that business is going to sell for, and kind of bring some closure to that valuation example that we were doing throughout this whole series. All right, so we'll go over to our whiteboard here and talk a little bit of the difference between multiple and return on investment, or are these things actually just the same tomato? So we're going to start off with this camera has a really difficult time focusing unless there's something on the whiteboard. Okay. So we have our buyer over here, Mr. Buyer, or Mrs. Buyer, and they're saying that anything they're investing in, when I make an investment, I want a 20% return. Okay, nothing wrong with that. I'm not going to hold it against them. Seems like a pretty good return to me. What does that actually mean, right? So what they're saying is they want a 20% ROI, or if they're dealing with real estate, it could be the terminology's cap rate, or in business transactions, you'll sometimes hear people say hurdle rate. Okay, it's all the same stuff. Really, I mean, there's a little bit of differentiation between cap rate as it returns with debt service and whatnot, but I might do that in another video. But for the most part, this is all the exact same. It's like they're just looking for a 20% return on whatever investment vehicle they choose to put their money into. Fine. Okay, that's good. How would we convert that into a multiple? All right, it's really, really simple. All you're going to do is take 1, divide it by your 0.2, your 20%, and that gives you 5. All right, that's your multiple. So you can say 5 times. So basically, this particular investor would be willing to pay up to 5 times a multiple for a company because they're still going to get their 20% return. All right. Now, on the other side, though, us down here, the seller, we aren't really thinking so much from a return perspective because we're not the ones buying the company, right? We're selling the company. So we think more of a multiple perspective. It's like I have my earnings. What kind of multiple am I going to get of those earnings when I sell my business? So you're over here and you go, I want a 3 times multiple when you sell, okay? There's nothing wrong with that. That sounds pretty good. So again, super simple, right? So all we do is if we don't know the ROI in this one, but we do know that we want 3 times, right? So we can just do the, I don't know what grade math this is, right? But we just move the numerator denominator, give ourselves, bring this 3 underneath here, and that gives us 0.33, right? So it's like essentially 33%. So we need to find ourselves a buyer who wants a 33% return. In this sense, oh, well, any buyer is going to want a 33% return. That sounds like an awesome amount to get on any investment. But let's actually take a look. That's our next section in this video, is to take a look at what's normal in small business sales, right? So anyway, I hope this gives you guys a bit of a deeper understanding of where like multiple versus ROI, it really is the same thing. It's just represented in a different way, right? One's represented as a percentage and the other's represented as a whole number, right? So super simple when you kind of take a look at it, but to be honest with you, this took me a long time to figure out, and it makes it easier when you go to sell your company. When someone says that they want to, they have a 20% hurdle rate, you kind of have a general idea of what kind of multiple they're going to pay for your company. So let's click back over to our other slide. All right, so next up, what we're digging into here is multiple for small business versus other sectors, right? So we kind of want to know, where do we fit into this landscape when we're selling small businesses, and what can we expect? So this little chart here can be pretty helpful. So basically, when we think of ourselves as an investor, or we think of our buyers as investors, they have multiple places that they can put their cash, right? So they can put their cash into a bank deposit, like just put into the bank. And in a bank, you're going to get a 1 or 2% return, which is a 50-year payback. And that's just how long it's going to take to get the money. But we're patient because there's high security and really low risk in the bank, right? But as we trickle up through these different investments, so we can invest into bonds, we can invest into real estate, the expected returns are kind of bumping up here a little bit. Stocks, our expected returns are bumping up a little bit, and our payback period's dropping down, right? Then we start getting into investing into companies, right? And this is what we're talking about in this video. So privately held companies, the larger a company is, the less perceived risk, right? So large companies here, where the payback investors are expecting 6 years, and the expected returns, are getting into that 15-20%. But this is where we live down here in privately held Main Street companies, right? Small businesses that are owner operated. That's what we're talking about in this video, and that's what the Happy Dealmaker is all about, helping businesses of that size. We're kind of in this revenue under $1 million. Our businesses are considered very risky at this point, right? So investors are looking for a 35 to 40% return or payback in 2.7 years. And to be honest, when people are buying companies of this size, they're owner operators. You're going to be selling your business to someone who's going to step in, be in your shoes, and start operating your business as the owner operator, right? So they're basically just taking over your position. There's a lot of risk to that, right? Because they don't have the same skill set that you have. They don't have the same knowledge that you have. So they will perceive it as high risk, and they may not be thinking as an investor, but they'll definitely be thinking, how quickly am I going to get my money back, right? And it sits around that 2.7, that 2 years, 3 years is kind of what small investors are looking for, or owner-operator investors are looking for. And so this is where we live, right? So then we take that back to that 30 to 40% return they're looking for and convert that into a multiple. We're kind of in between that 2 to 3 times multiple, okay? All right, so next up is the whole purpose of this video. Now that you guys have a kind of fundamental understanding of return on investment and where these multiples come from, is let's determine your multiple, right? So to do this, you're gonna cruise on over to this site, sellasmallbusiness.com/resources. And when you do that, you're going to end up right here. And the site's going to look like this: the largest online list of tools to help small business owners transition. Okay, this is something I've put together over the last 5 years, just kind of piecing as I've gone through this journey of small business sales, and I've been cataloging all the sites that can help small business owners in their sale, right? So this site can be really helpful for you. But if you cruise down and you go to the blue section here, business sale data sources, this is what's going to be extremely valuable for helping you find your multiple. So this block right here that says sale price comparison, all of these links go to databases that hold information on businesses just like yours in your industry that have sold, what they sold for, and what the multiple was that they sold for. So for instance, if we go to business valuation resources and click on this, which to be honest with you, I find this one's the best. Unfortunately, it's the most expensive. Some of these are a little bit less expensive, and they'll give you the same similar data as well. So kind of click through and find which one you're most comfortable with. But if you go to business valuation resources, it's going to pop this site open right here. I'm going to log into mine. All right, and then what you do here, which is pretty amazing, is you can search by SIC code or you can search by NICS code. And if you don't know what your SIC or NICS code is, then you can scoot right back here and go to this site, NICS code, and then just go over here to where it says NICS code, and then type in your industry, right? So we were talking about a furniture store. So we type in furniture, search, and there it is right here, furniture store, and 442110. So that's your NICS code, right? So a lot of these database sites will use the NICS code for searching. So if you have to use the NICS code and you don't know what yours is, that's how you get it, all right? So let's go back here. And in this site, it actually makes it even easier. You don't necessarily even need the NICS code. You can kind of just search over here on this side. So we go, okay, we're retail. Oops, we're gonna open this retail up, and furniture, home furnishings, and furniture stores. So then we just click furniture stores, right? All right, and what that's gonna do is it pulls up 81 records. So there's 81 businesses in this database that were furniture stores that have sold. So this is kind of interesting, right? Because now it's giving us all the data on what these companies sold for, which can be incredibly valuable for us knowing what the value of our company is, so that we know what it's gonna sell for in the future. Now, a lot of these companies might be larger or they might be smaller than your business or the business in our example. So we want to kind of filter for that as well. So if we look down here and we go net sales, we click on this. All right, so this is showing us in this data set, we have businesses ranging from 0 to $100 million a year in revenue, right? Well, the business we were doing our valuation on in our example, I believe it was 2.5 million. So what we're going to do is we're going to narrow this data set down a little bit, and we're going to search for businesses that were doing revenues of 1 million up to 3 million, because we want businesses that are kind of a similar size to ours. So that reduces our data set from 81 down to 26, but our data is going to be more accurate now, right? So anyhow, so now you can cruise down through here, and you can sort by year. There's all sorts of things you can sort by. But for the most part, if you're searching your industry and your business size, that's going to give you the data set that you want. And then we can click over to statistics. All right, and this is going to show us the range of all the ranges of these businesses, right? And kind of break them down into percentile groups, which can be extremely valuable, right? So again, like our net sales, we're looking at businesses that were ranging from $1 million in sales up to $2.5 million in sales. So this is good. This is the bracket that we want to be in. And now we can cruise down and we can look down here to SDE. So SDE is the number that we're working on in this example. And it is also the number that's probably the best to use of a company for this size, representative of earnings, right? So we look at SDE and we can cruise over here down from the median, 2.6. So there's our answer, all right? So in this industry, the small business furniture sale industry, we can expect on average the business to sell for a multiple of 2.6. So I'm gonna erase our whiteboard here and store that just so we have it for our final calculation. All right, and there you go. So that's how you can find it. So you can do this for your industry, and like I said, you can go back to sellasmallbusiness.com/resources, and it's going to bring you over to this site, and you have all the links here to determine what your multiple is going to be on your business. Oh, one thing here. So if we pop back to this, you say, okay, well, Scott, look, that's fine. That's the average, but I'm not average. I'm going to sell within the 90 percentile. So I'm going to sell my business for 3.7. Okay, possibly. Or what if you're in the 10th percentile, right? And your business is going to sell for 1.8. Well, that's going to make a big difference. Let's put those two numbers down actually, because we'll do those two calculations. So the low was 1.8 and the high was 3.7. All right, we'll hold that for later because I got a bonus for you guys coming up that is going to help you out get to that higher bracket. Okay, so you can quickly scoop back if you want to like go back to the sellasmallbusiness.com/resources, and again under this sale price comparison, all these links are going to take you to databases that have this information that'll show you exactly what your multiple is. Okay, so let's scoop back to where we're at over here. Okay, so what do we have left here? So we're going to finish off our furniture calculation. So we'll go back to our whiteboard. These were our multiples that we were looking at. If we recall that we had our SDE for our furniture business, and you can go back to video 2 to figure out where this number came from and how to calculate yours. But it was 316,664. So now we're just a bit of a multiplication session, right? All right, there we go. So massive difference, right? We have 569,000. Some businesses sold for that were in this industry at a 1.8 multiple. We have our average 2.6 multiple. So the average business in this furniture industry is going to sell, that's doing this SDE, is going to sell for 823,000. And then we had a little bit of an outlier here, sell for 3.7, and that's 1.1, almost 1.2 million, right? So it's double, literally double what's happening over here from an earnings perspective at the end of the day, the cash at close that these sellers are getting, right? So the big question becomes, you know, we're likely to be sitting here in the average. We don't want to be here, no, and we do want to be here, definitely, right? And that's the whole reason for the Happy Dealmaker channel. That's what we're here to do, is to help you guys go not to here, but to here, right? Like that's where we want to be. Of course, we want to make more money when we sell our company. So the big question is like, how do we do that, right? And that's the bonus. That's video 4, all right? In video 4, I'm going to teach you, I think, 6 different ways. There's a multitude of ways, and that's the whole, subscribe to this channel, because that's the whole reason for putting it together. We keep releasing videos that show you how to get here, right? This is where we want to be. But in video 4 of our small business valuation series, I'm going to show you some ways to actually do that. And that's the whole point of getting you to this point, so we can get you the next video and make you some more money. All right, that's the end of video 3. I look forward to seeing you in video 4, where we teach you to add a little bit more value to your business. Don't forget, like and subscribe.